Let's say you have $2 million in dirty cash. You immediately face a logistical wall. If you try to deposit it into a bank, it triggers an automatic report to the government. If you pack it in a suitcase and board a flight, you risk losing everything to a customs search. And yet, between 3 and 5% of the world's GDP, roughly $4 trillion in criminal proceeds, manages to disappear from the streets every single year without tripping a single bank alarm. Most of this money never physically crosses a border. It stays exactly where it was generated, while its value flies across an invisible global network. Organized crime has built a shadow banking system that operates in parallel to the global economy. It is a hidden international ledger used by syndicates to move wealth without moving a single dollar of physical cash across a map. The mechanics of this system were perfected during China's Tang Dynasty. Merchants at the time faced a crippling physical problem. They were paid in heavy copper coins, and carrying bags of that weight across long, dangerous trade routes made them easy targets for robbers. To solve this, a merchant would hand his coins to a trusted broker in the capital. In exchange, he received a lightweight piece of paper verifying the value he had deposited. The merchant then traveled home empty-handed. Once there, he presented that paper to a partner broker in his home region and received the equivalent value in local coins. No physical wealth had to risk the open road. The entire exchange functioned as a localized ledger, balanced through the trust established between the two brokers. This ancient solution for merchant safety accidentally created the perfect mechanical blueprint for modern criminals looking to bypass digital surveillance. This logic is exactly how a dual-sided swap works today. Imagine Mr. Chen, a wealthy civilian in China who wants to move $2 million out of the country despite strict government limits. At the same time, a Mexican drug cartel has $2 million in street cash sitting in Chicago that they need to get back to Mexico. Mr. Chen deposits $2 million with an underground broker in China. Simultaneously, the cartel hands $2 million in cash to a U.S. broker. Coordinating via encrypted apps, the U.S. broker gives the cartel's cash directly to Chen's cousin in America. The cousin uses that cash to buy a luxury apartment. On the books, the broker in China officially owes the cartel $2 million. Because the clean money and the dirty money never physically crossed a border or entered a regulated bank, the entire transaction is virtually invisible to international authorities. This leaves one remaining problem. The two international brokers eventually have to settle that $2 million imbalance without using a traceable wire transfer. To clear the debt, they hide behind the daily volume of legal global trade. The Chinese broker ships $10 million of refrigerators to a cartel-owned retail company in Mexico. By deliberately underbilling the shipment, charging only $8 million for $10 million in goods, $2 million in value transfers invisibly, zeroing out the broker's ledger. Mundane, highly taxable international trade becomes the vehicle for clearing massive criminal debts. Beyond cash and appliances, the shadow ledger treats illicit commodities as its own form of currency. This is the dried swim bladder of an endangered totawaba fish. Mexican cartels harvest these to sell to the Chinese mafia, who prize them as status symbols worth tens of thousands of dollars per kilogram. Instead of paying for these bladders with cash, the Chinese mafia settles the debt by shipping the cartel fentanyl precursor chemicals. Drug cash, endangered wildlife, and chemical precursors all blend into one borderless market.
Each illegal product acts as a credit on a global ledger that never touches a traditional bank. We live in an era of digital tracking and hyper-surveillance, yet this $4 trillion system remains largely immune to traditional policing. The ledger thrives because it is low-tech. It relies on human memory, ancient cultural bonds, and localized chats, rather than centralized servers that can be subpoenaed or hacked. Dismantling this network requires years of patient undercover work, but most law enforcement agencies are incentivized to chase immediate results, like stacking seized bricks of drugs for a press conference, rather than untangling complex financial webs. This system remains untraceable because it operates on a logic that digital surveillance isn't built to find. It proves that a network built on human trust is still significantly harder to infiltrate than one built on servers.